Hello and welcome to BQ Prime. You're watching IPO Adda, and my company in focus today is IRM Energy, which is a city gas distribution company spread over four geographical areas. And joining me is Mr. Karan Kaushal, who is the CEO of the company, and Harshal Anjaria, who is the CFO of the company. Uh, there is this company is coming up with an IPO with a price band of 480 to 505. It has a fresh issue of 545 crores, and the market value is roughly over 2,000 crores at the upper end of the price band. The IPO opens on October 18th and closes on October 20th. Gentlemen, thank you very much for joining us on BQ Prime. To begin with, we are raising 545 crores through fresh issue. uh, can you take us through what is the use of proceeds here?
So the use of proceeds are categorized into three. First is to fund the capex for the Namakkal and Tiruchirappalli GA, which has been licensed to us, amounting to 307.6 odd crores. Second is to prepay the certain portion of outstanding borrowings of close to 135 crores. Balance is the general corporate purpose.
Hmm. Give me a sense of Harshal, uh, the kind of debt which is there on your gross debt which is there in your books as of today, and is there a further plans to, this is a capital incentive intensive industry, at least the first phase which is there. How do you plan to raise funds further if you have to expand your expand within the geographical areas?
So currently, as on June, we have a debt of around 300, gross debt of around 300 crores. Once the IPO is through, and once we prepay the borrowings of 135 crores, the gross borrowing post IPO would be 165 crores. We are raising the funds as of now to fund the capital expenditure for the new GA, for which we are pushing the infrastructure. And once the critical infrastructure is up and running by September 2026, during that period, we will be spending this 307 crores. The cash flows would be sufficient enough to fund the incremental capex for the coming years. So we don't plan to raise any additional debt to meet any incremental capex at a company level.
Karan, four geographical areas. What is the kind of sourcing agreement that you have for gas?
So we have contracts with all the leading gas suppliers in India. That is, one firstly is GAIL, Gas Authority of India Limited, then IGS, which is a offshoot of Reliance, and we are sourcing gas from RIL BP from the KG-D6 basin, which is the HPHT gas. The other ones are IGS, which is an offshoot of Reliance. They are also the basic source of gas is from the HPHT fields in Krishna Godavari basin, but they are sourcing it from there and we are buying it from there and them. And we also used to have an operating contract with IOCL, and which we will renew in going forward.
So all your geographical areas are on the line of these gas pipelines. How do you transport this gas, because that's the biggest cost for you, right?
Yeah. So when we do our bidding, that is the first criteria for us. We choose GAs. We have chosen GAs where there is a gas pipeline connectivity, because that is as a result, as you rightly said, that is a big part of our cost matrix. And we have got this gas connectivity right inside our GA. We don't have to bring gas from some other area and transport on trucks or by some other means. So all our four areas in Fatehgarh Sahib, we have a gas connectivity on the Dadri Bhavana Nangal pipeline from GAIL. In Gujarat, we are on the Mehsana Batinda pipeline from GSPL, and in the southern part, we are also on the GSPL network in Saurashtra, and in South India, Namakkal and Trichy, we are on the Ennore Tuticorin pipeline. So we have a seamless gas connectivity. That is one of the big positives of this company.
Give me a sense of the kind of sourcing agreements that you have with the respect to how much of gas can you source going forward, and scalability of sourcing.
So currently we have a contracted RLNG volume of close to 3.5 lakh SCMD. out of which close to 80-85% is from the Reliance BP KGDC basin HPHT gas, and rest from GAIL and IGS. We have a mid to long term sourcing agreements with a period ranging from 3 to 5 years, and we are constant lookout to tap in the gas requirement for our business. And as and when the need arises, depending on our the demand for the gas, we discuss bilaterally with the players in the market and tie up the requirements.
So the entire sourcing is from domestic gas, or there is a component of foreign gas as well, which comes into play?
We don't directly buy foreign gas, but as Karan ji mentioned, we have a contract with GAIL, and they buy from international sources. So we don't
within your portfolio, what percentage would be imported gas or or LNG, and how much would be domestic?
So out of 3.5 lakh SCM for contracted RLNG, close to 17% would be imported LNG, and rest from the HPHT fields of Reliance and BP.
So that's the current kind of thing. But since you're growing at what 25-30% every year, what is the kind of escalations that you have and future gas supply?
So we will look to participate in the forthcoming any of the forthcoming round of gas bidding coming up either from ONGC or Reliance and BP from the Krishna Godavari basin. And in case we have an additional requirement, then we will also enter into bilateral arrangement with IOCL, BPCL, or GAIL, who are importing LNG into India, and then we can buy from them. Apart from this, we are also since a Japanese entity, Shizuoka Gas, they are a CGD entity based out in Japan and fourth largest natural gas player. We are in discussion with them, and they have access to cheaper LNG from their outstanding contracts from Qatar, Indonesia, Thailand, and Australia. And we are just exploring the possibility if we can bring their contracted volume not only to meet our requirement, but to cater to the requirement of any other CGD players. So we are very conscious and prudent in forecasting of our volume, and will look to tie up incremental requirements from any sources possible at a competitive price.
So you have this arrangement wherein the infra can be used of any of the gas players, pipelines, and you can bringing them on board through LNG terminals into your geographical area, right?
Yes.
Okay. Give me a sense of the maturity of the 4 GAs, because it takes 15 to 18 months for any GA to mature and start giving revenues. So give me a sense of how each of the GAs are working, because I was looking at one or two GAs of yours where Fatehpur has a higher contribution of PNG, but Banaskantha has higher contribution of CNG coming to your revenues. So give me a sense, where are we on that?
So we commenced our operations in these two geographical area of Banaskantha and Fatehgarh Sahib in July 2017. So we are in the 6th year of operations. We will not say that they are still mature. They are still on the growth cycle. It is yet there in 3-4 years until we achieve maturity in this GA. There is demand which is still unpenetrated in these GAs. In Fatehgarh Sahib, there is a set of 400 industries, re-rolling mills. There is a place called Mandi Govindgarh over there, which is a re-rolling hub of North India. And we are in the process of energy transition for all these industries. They were using polluting fuel. They were using coal, FO, petcoke back when we got this authorization. So by the way of the directive from National Green Tribunal and on our own efforts, we proved gas as a very alternate and clean fuel for them. And it is now proven, and they are very happy using gas. Some of these industries are using gas, and some of them are still using petcoke, coal, and furnace oil. So this transition is in the process, and by 2027 we will be more or less converting the whole base of 400 industries to come on natural gas. So this is how the demand will pan out. So that is why we are saying that we'll almost double the gas sales over there. And in Banaskantha, it is being in Gujarat, it is a CNG market. As you know, historically, CNG is the primary fuel in Gujarat. And from 2017 onwards, we have been setting up our CNG network. We are having around 40 CNG stations over there. And we in going forward in 2 years, we'll be having around 60 CNG stations. So this is how these two GAs have evolved. We added
Mm.
one geographical area in 2018, which is Dew and Gir Somnath, which is also in south of
Mm.
Gujarat, which is also a CNG driven uh, GA. And we it is just starting operations. We lost 2 years due to COVID, but now we are majorly pushing the CNG infrastructure in this GA. We have 16 CNG stations operating in these geographical areas.
Okay, so give me a sense then, from a customer point of view, how is the CNG adaptation in these four geographical areas? Like, in some of the metros, you have a lot of residential and retail customers coming in for CNG or PNG, sorry, P for PNG. But for these four geographical areas, it seems that more of an industrial customer base is what you're targeting.
I'll talk about Banaskantha first. Uh, the primary first choice of any customer of when it is buying, they are buying an automobile, is that they are buying a CNG car over there. Every month there are more than 400 to 500 CNG cars sold in Banaskantha. And in the last 2 3 years, we have got a double digit growth in terms of volume. And we are confident that this trend will continue. Fortunately for us, this is a heartland. This is in North Gujarat. There is no EV threat over there, and there is no availability of public transport. So the primary fuel over there is CNG in North Gujarat. And in Fatehgarh Sahib, it is a smaller area, but there is a industrial base over there to which we are catering. We are converting all the industries, and going forward, we'll add up more industries over there. And because there is an ecosystem in this industrial cluster, there are other ancillary industries and pharma parks and textile parks announced by government of Punjab and government of India, because of the ecosystem of industries, labor, water, electricity. So that is why we are very bullish about the demand coming in from Mandi Govindgarh industrial cluster.
Hmm. You mentioned that there's no threat of EVs in Banaskantha. Why is that?
Because there are no charging infrastructure as of now, though we are setting up our
You
uh,
have a JV for charging, setting up
yes.
infrastructure, right?
Yes, so we just because we want to be a part of this story, we have set up some EV charging infrastructure in our own CNG stations, but we get only one or two charging in 15 days. So this is right now the trend. And in the primary mode of movement of people over there is autos and commercial vehicles like ecos and small matadors, which are
Hmm.
plying on CNG. So these are people coming in from the heartland and to the cities of Palanpur, Disa, and so the daily flying is around more than 80 to 100 kilometers.
Hmm.
Uh, so technically, seamless charging infrastructure has to be there. There is a risk that if the car gets discharged and all those things, there is a risk of seamless connectivity. So that is why we believe that EV is not a threat in Banaskantha. It is in terms of area, it is more than 12,000 square kilometers. Second biggest district of Gujarat. Um, and also.
So basically, you're looking at
Mhm.
either institutional clients in the sense of industrial clients, but not on the retail side from a domestic point of view, right? Though you have some bit of domestic.
Ajit ji, we have around 52,000 domestic
That's
connections.
right. So there's no. How do you plan to expand that? Because that's much more time consuming and in terms of expansion, right?
Yes. So in terms of domestic connectivity, majority of our domestic connections, out of 52,000 odd connections, we have 42, 43,000 connections coming in from Banaskantha. And 43,000 connections also are from only two major cities of the district, which is Disa and Palanpur. We are yet to open up other areas. There, Banaskantha as a district, as Karanji said, is the largest district of state of Gujarat, excluding Rann of Kutch. It has 12 talukas, and we have just approached or penetrated in two talukas in terms of PNG network. So there is still a tremendous scope for penetrating in other part of the district for PNG connectivity, and we will ramp up our infrastructure to cater to the demand of domestic connections. Yes, you rightly said it is a long period to roll out your network, pipeline network to cater to the domestic, but still it gives a very steady and consistent cash flows, and we are very conscious in that, and that because of those large base of customers, despite of COVID, when there was a total national lockdown for a couple of months, wherein the transportation business was severely impacted for everyone, we still were not in red. We were operating profitably, and that was because we had a connection base of close to 40,000. At that time, it was 35,000 domestic households, and there was a steady flow of gas availability. We did operated CNG station as it is a emergency services classified. So we were still not in red during that period, and we'll ramp up our domestic connectivity infrastructure in all the four GS where we operate, because those are still under penetrated.
Harshal, give me a sense of your operating margins, because it has come down in the last 2 years from 34 odd percent in FY22 to roughly around 11% in FY23. Though we have seen uptick in the Q1 or to 17 odd percent. Give me a sense, what is the stable margins that going to be there, or will there be a volatility in margins?
So last couple of years have been aberration, both on the positive side and negative side. 2022, because of the LNG prices at the rock bottom, there was a windfall gain for everyone. 2023 was on negative side because of the Russia-Ukraine war. The natural gas prices across the globe skyrocketed. India was also impacted severely. So that's why you have seen a higher margin in FY22 and a lower margin in FY23. As we speak, we have a fair bit of understanding on the natural gas pricing, particularly for domestic gas, because with the implementation of the Kirit Parikh committee from April 2023, we know that to cater the demand of CNG and PNG domestic, we are going to get gas at fixed price, which was not the case last year at a $6.50 per MMBTU. And this will be fixed for 2 years, and then after 2 years it will be an only incremental change of $0.25 per MMBTU on a yearly basis. So there is a clear visibility that we will get a source of gas to cater to 50% of our total volume at a fixed price. That will help us at least to retain the current margins which we are doing of around roughly 18%, if not better. So we have moved out of the lower margin regime of 2023, and we are reasonably confident that we'll be able to have a decent margin.
So is that, if you speak that way, the industry margins are also in a similar level of 17-18% of some of the key competitors of yours. So you expect stability coming into your margins. That's what you're saying.
Yes.
Okay. Give me a sense of what is the kind of I know you're going to use a large chunk of this proceeds for capex as well, but over the next 5 to 10 years period, what is the kind of investment that you need to do to expand yourself, not only for CNG, PNG, but also for domestic, PNG as well?
So we estimate to incur a capex of between 440 to 475 crores over the period of next 4 years, out of which bulk of the capex will go on to Trichy and Namakkal of around 308 crores. That would help us penetrate in all the 4 segments, including CNG and the PNG 3 subsegments. And with this implementation of the capex, we would see a good growth in the volume coming up from all the GS and all the four segments.
Hmm. So initially you will be targeting industrial customers in Trichy?
No, we will target CNG and PNG segment both, because Trichy also, although as compared to Banaskantha, is a smaller GA, but it's still a big enough GA of close to 8,000 odd square kilometer of area. Trichy and Namakkal both put together.
From
In
an industrial use point of view?
So in industries, we have one of the biggest industrial player called Bharat Heavy Electricals. They have a facility, boiler manufacturing facility, and SS tube manufacturing facility right at the outskirt of Trichy city. For which, as Karanji mentioned, we are already in the process of laying off our pipeline infrastructure, and we plan to connect BHL facility this year itself. And apart from this, there are other three or four industrial clusters in the Trichy and Namakkal districts. So as and when we ramp up our pipeline infrastructure, we will connect those industrial clusters and try to tap the demand from the industrial segment. For CNG,
Karan, yeah,
Yes.
please go ahead. Sorry.
for CNG, we plan to set up close to 60-65 stations in the next 3 years in Trichy and Namakkal, which will help us penetrate in all the corners of the both the districts, and the customers will have a clear visibility on the availability of CNG, because unless until there is a visibility on the stations, they don't see the stations, they don't convert, they don't buy CNG vehicles. So that's why we are pushing our infrastructure, and will push our infrastructure in the coming 3 years, and will penetrate in all the four segments in terms of
So
infrastructure.
when you say that you're going to set up CNG stations, do you tie up with the local OMCs which are existing there, or you set up your own stations?
To start with, we already have a CNG standard agreement with all the three OMCs, all marketing companies in Namakkal and Trichy, and we are using their retail outlets to set up our CNG stations. Once the penetration is there, people see the benefits of the CNG and operating a CNG station, then we'll push our franchise model, which we did with Banaskantha, wherein we are operating close to 34 uh, our own franchise model CNG stations out of the 38 CNG stations which we have in our portfolio in Banaskantha. So we'll try to replicate the similar modality in Trichy and Namakkal, because that gives us building our brand, our own brand in the area where we operate, and where we have exclusivity for at least 25 years in terms of infrastructure.
Karan, give me a sense of your four JVs, because you have a JV for compressed biogas, imported cylinders, PVC, HDPE pipes, which is there, and renewable energy as well. These all four are means not clearly related, but they are ancillary to your operations in some way. So give me a sense. You have 50% stake in each of the JVs. Who are the other partners in this, and how do you want to scale it up? What kind of capital requirement these JVs will need from your end?
So in terms of capital, I'll take the last question first. In terms of capital requirement, we have invested around 12 odd CR in these JVs, in the MDP pipeline and the biogas, and also we have recently incorporated a subsidiary which is into renewable energy. So the idea behind is that we want to become, going forward, a total energy company, a integrated value driven. This is how we see ourselves to be in going forward. So we want to be in areas which are synergic to our existing operations, and this is happening with other city gas companies also. They are also venturing into similar kind of businesses. uh, the idea to go into compressed biogas is that it gives us an indirect way to enter into geographical areas where we are not authorized, because compressed biogas is outside the regime of the licensing, of the regulator. So we this Farm Gas Private Limited has already set up a bio CNG retail outlet in a geographical area where we are not licensed. So that was the genesis where it came from. And the idea of setting up of a MDP entity was that there was a lack of supply of MDP pipeline in India because of the various licensing in the ninth and 10th round. There was a huge demand, and we could not get our pipeline for our own requirement just in time. So we thought that we'll go for backward integration, but now this entity just out of its total production capacity, it just gives 5 to 6% to IRM Energy. Rest it is supplying to all leading city gas companies in India. This is Venica Polymers. And the third is the Type 1 cylinder. It's a trading arm, a trading company. We have just picked up a 50% stake. And the other 50% is with a Delhi-based leading retrofitting company called Geolad. So it is just to push the retrofitment ecosystem, because there is also a lack of supply of Type 1 cylinders in the retrofitting ecosystem. So it gives us a assurance of seamless supply of retrofitment ecosystem in our GAs. And the fourth is just in the incubation stage that we want to, going forward, we want to venture into solar and wind hybrid parks. But this is just on the table right now. We are just exploring possibilities.
So
Regarding
you will be setting up parks, or you going to set up manufacturing facilities for solar panels and solar fleets and others.
No, we don't want to go into manufacturing. We'll set up one big park in Gujarat, which is still under. We are just identifying the location, and we want to cater to the commercial and industrial segment, because Gujarat government has recently come up with a very good renewable policy in which the consumers can be a part of the equity structure and get the whole take the whole offtake of the renewable power. So that brings down their cost of electricity also, and we will be a part. We want to benefit from this recent policy. This
So
is
this is that like the net metering or kind of thing which is there for rooftop solars and other stuff.
no, this is on the bigger scale. We want to set up projects of 50, 25 megawatt modular megawatt each, and give power to reputed industrial customers and enter into a long-term PPAs with them.
Give me a sense of that. You said that your compressed biogas allows you to enter into GS where you are not there. Have you got connectivity to the grids as well? Because the compressed biogas needs to be channelized into the grids as well, right?
That is right now just a concept. Compressed. We have a plant from farm gas is producing compressed biogas, and the gas is moved on the trucks. Going forward, all these compressed biogas plants coming in the country will eventually they will pour their gas into the gas grids, but it has not really happened right now. There is still the policy framework is being made by MOPNG and GAIL, and they are very progressive towards it. But for this plant, we are producing gas, the compressed biogas, and moving it onto the trucks and dispensing it in the retail outlet in an area which is not authorized to us.
Okay. Give me a sense, finally, you are coming out with your IPO. How do you value this IPO? Because, as compared to your peers, and what is the kind of competitive challenges that you see here? Because pricing is something which almost fixed for you for 2 years, and then there's an incremental thing, but you have a lot of exposure to geographical volatility which comes in, which increases 50% of the other gas requirements. So how do you plan for the scaling up of your operations and gas requirements in such a scenario?
So our sales volume have consistently grown over the past few years. In terms of growth, our volumes grew by close to 63% CAGR between 2020 to 2023. And if we compare it with the likes of other peers, we have outperformed them. In terms of EBITDA growth also, our EBITDA has grown by close to 34% CAGR between during that same period of 2023, and we have also outperformed the industrial peers in that thing also. As we highlighted earlier, all the four GAs are still under penetrated. We are pushing our infrastructure. we based on our estimates and as highlighted in the industrial report also in the RHP, our volumes are expected to grow in FY27 by FY27, and we'll still try and push our infrastructure that would help us maintain the same growth which we have achieved. There is a visibility, as you also highlighted, that we will get access to cheaper gas for catering to 50% of our requirement, which will help us in retaining or maintaining or improving the margin. For the rest 50%, since the LNG facilities across Indian coastline, both western and eastern coasts, are being ramped up, we'll see cheaper RLNG also coming into India. The global liquefaction facilities are also being ramped up in Qatar, Canada, US, etc. So there will be a increased supply of LNG in the global market. That would also help stabilize the pricing. Unless there is a Ukraine war-like scenario again happening, we are not seeing a upheavaling in natural gas pricing in the future. So all this would help us maintain a good margin, and we are reasonably confident that whatever we have delivered historically, we will try to achieve that.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on October 18th, closes on October 20th. It's a fresh issue, 545.4 crores, price between 480 to 505, giving you a market value of over 2,073 crores at the upper end of the price band. Thank you very much for joining us on IPO Adda on BK Prime.
Thank
you
you.
very much.
Thank you.